Hi students, welcome back to Commerce Veda. As CMA Inter exams approaching very quick, few of my students requested me to record the solutions and the explanations for departmental accounting sums. So I'll start with the question number 14, which is in the study material. This talks about a question where it says, Mr. Unique is a departmental store having three departments, X, Y and Z. Information regarding the departments were given here. So what we should do in this question is read the question carefully, because departments are a part of one single company. There will be some expenses which the company incurred which belongs to all the three departments, where we need to identify how to allocate the expenditure between each department. Every expenditure, say here there will be direct information given. Opening stock is given department wise, furniture given department wise, purchases, sales, closing stock, debtors were given department wise. However, some expenses such as carriage inwards is given full. This is for all the three departments. On what basis I should allocate? Outwards, discount allowed, advertisement, wages, discount received, employee welfare, rent, rates and taxes, electricity charges and depreciation. There are so many common expenditures. See, these are all we can say common expenditure. How do we allocate this common expenditure is important. Once you allocate the common expenditure, preparing what they ask to prepare departmental trading P&L account. So here the rule is, how do we allocate the common expenditure? This is the important thing to learn. Now, if you see carriage inwards, it is actually what? Carriage inwards is for purchases. So you need to identify purchase as a basis to allocate carriage inwards. And carriage outwards is for what? Sales. Because you want to sell. That's the reason why you are sending them out. So you should select sales as a base to apportion the expenditure. Discount allowed. Discount you allow on sales to the debtors. So for discount allowed also you need to have sales. Advertisement, sales. Wages, number of employees. Wages are based on number of employees. Discount received, you receive discount on what? Purchase. Employee welfare expense, again number of employees. Rents, rates and taxes. Rent, rates and taxes are basically on the occupation of the floor space. It is there? Yes. So it is based on floor space. And electricity charges. You have given electricity units consumed. So that should be based on units consumed. And then you have depreciation on furniture. It should be on the value of furniture, because depreciation is on value of furniture. And given bad debts are again on sales. So common expenditure allocation, the important task here is common expenditure apportionment between all the departments. This is the basic thing for this question, and then you can simply compute the trading P&L account. Let us write down the expenditure in order here. I'll write expenditure basis ratio department X, XYZ, right? Yes, department Y and department Z. Each common expenditure. First common expenditure is your carriage inwards. Carriage inwards. What is the base? Basis purchase. And what are purchases? 264 is to 176 is to 88. So the purchases are in the ratio of 264 is to 176 is to 88. So 264 plus 176 plus 88, total is 528. If you allocate this, the total expenditure is 6,000. 6,000 divided by 528 is 111.36 into 264, you get 3,000. Again, 6,000 divided by 528 into how much? 176, that is 2,000. 3 plus 2, 5, balance is 1. So your total is 6,000. This is the first allocation. The second allocation is for carries outwards. That should be on the basis of sales. What are sales here? 360, 270, 180. 360, 270, 180. Nothing but if you divide with 3, it is 1296. 1296 and 432. That is the ratio. Now 360 plus 270 plus 180, the total is 810. Now come to the total value. 5,400 divided by 810 is 6.66 into 360, you get 2,400, and again 5,400 divided by 810 into 270, you get 1,800. So 5,400 minus 2,400 minus 1,800, you will get 1,200. Total into 5,400 is the expenditure on carriage outwards you allocated to all the three departments. Now comes your third expenditure, discount allowed. Discount if we allow on sales, so it should be on sales. What is the sales ratio? Same, 36, 27, 18, nothing but 36 if I divide with 9, this is 9 twos, 9 threes and 9 fours. 4 is to 3 is to 2. You can use the same, 4 plus 3, 7, 7 plus 2, 9. So 4 by 9, total is 4,500 by 9 into 4, it is 2,000. 4,500 by 9 into 3, it is 1,500. And 4,500 by 9 into 2, 1,000. Totaling to 4,500, which is discount allowed. And the second one is advertisement. Advertisement is again sales based expenditure. So it is 5,400. We need to apportion in the ratio of sales only. So 5,400 by 9, actually 600. 600 into 4, 2,400. 600 into 3, 1,800. 600 into 2, 1,200. And the total is 5,400. We finished 1, 2, 3, 4. And the next one is wages. The heading is apportionment of common expenditure. I am doing it fast because it is quick revision before your December exam, CMA Inter guys, first paper. I think financial accounting, a very simple chapter department. Don't get carried away by the notion that department is difficult. It is as simple as your overhead allocation in costing. Right. Now, wages is based on number of employees. How many number of employees in your organization? 50, 40, 30. So the ratio is 5 is to 4 is to 3. 12. So how much is total wages? 96,000. 96,000 by 12. 8,000. 8,000 into 5. 40,000. 8,000 into 4. 32,000. 8,000 into 3. 24,000. 24 plus 32. 56 plus 40. 96,000. Now, discount received. Discount we receive on what? Purchase. When you have to make the payment towards purchases. So it should be purchase ratio, which is 264 is to 176 is to 88. So it is nothing but 3 is to 2 is to 1, because 88 1 2 3. So as I wrote 264 176 88, we can just go with the same. So the total discount received is 3600 divided by 264 plus 166 plus 88 is 528. So it is 3600 divided by 528 into 264, which is 1800. Then 3600 by 528 into 176, 1200, and the balance 18 plus 12 minus 3600 is 600, and the total is 3600. So we're almost done with 1, 2, 3, 4, 5, 6 allocations. 7.1 employee welfare expenses. Again, number of employees, we can use the formula 5 is to 3 is to 5 is to 4 is to 3. So 4800 by 12 into 5, 1600. 4800 by 12 into 4, I think 4500 by 12 into 5, 4800 by 12 into 5 is 2000. 2000, 1600, and 4800 by 12 into 3, 1200. So 2 plus 16, 3, 6 plus 12, 4800. Now comes rent, rates and taxes. Rent, rate and taxes are generally based on the floor space occupied. Given here 6000 square feet, 5000 square feet, 4000 square feet. I am writing here floor space 6, 5 and 4. 6 is to 5 is to 4. 6 plus 5, 11 plus 4, 15. So now 15,000 by 15 is 1000. 1000 into 6, 6000, 5000 and 4000. Total 15,000. And then electricity charges. Electricity is actually based on number of units, 600, 400, 200. So it is number of units, 600, 6 is to 4 is to 2. 6 plus 4, 10 plus 2, 12. So the total cost is 6000 by 12 is 500 into 6, 3000 into 4, 2000 into 2000, totaling to 6000. And finally depreciation. Depreciation on furniture should be on the value of furniture, and the value of furniture here is given as how much is the value of furniture, 40, 40, 20. So 4 is to 4 is to 2, or you can say 2 is to 2 is to 1. So the total depreciation 2000 by 5 into 2, 800, 800 and 8 and 800, 800 and 400. So total 2000. So all the expenditure you divided between all the department X, Y and Z, and arrived the total expenditure. So this is the step number 1 in this question. As we finished the apportionment as above, now what we should do is we should prepare a trading P&L account. For saving the time, I quickly finished it, and then we'll only miss one, which is bad debts. For that only we'll do the workings, but other things I'll explain quickly. I posted opening stock, I posted sales, closing stock, posted purchases, posted carriage inwards, and posted gross profit, the difference between the total of credit and debit. And all the expenses, whatever we apportioned here, were all posted here. Just copy pasted from this, like wages, carriage offers, discount, everything is posted here. Now what is exactly left here is the bad debts. Bad debts. How do you compute bad debts? Bad debts should be on debtors. So department X, Y, G, you have debtors in the question. Debtors in the question is 30, 20, 20. So coming back here, 30,000, 20,000, 20,000, and the rate is 5%. 1,500, 1,000 and 1,000. So coming here, bad debts 1,500, 1,000 and 1,000. So with this 112,800, 80,200, 93,600, we should compute net profit. We should compute what? Net profit. So net profit. How do we compute net profit? 1,12,800 minus all the expenses, 40,000, 2,400, 2,000, 2,400, 2,000, 6,000, 3,000, 800, 1,500, 52,700 x 80,200 minus 32,000, 1,800, 1,500, 1,800, 1,600, 5,000, 2,000, 800 and 1,000, 32,700 and 93,600 minus 24,000 minus 1,200 minus 1,000 minus 1,200 minus 1,200 minus 4,000 minus 1,000 minus 400 minus 1,000. It is 58,600. With this, the answer is completed. What I did is, trading P&L account, I don't want to waste time because you know the copy pasting from the question, opening stock, purchase, inverse, gross profit, sales, closing stock, and only this working we didn't do. All these are from the above working which we already completed. So pasted the information there in the respective departments, so that time will be quickly we can finish the answer. So this is the net profit. And what exactly we should also say that apportionment to the common expenditure is the first step, computation of provision for bad debts is the next step, and final answer is the last step. So this is a very, very important question, which is most of these questions is cost to cost transfer, no stock reserve, simple apportionment and copy pasting in the trading P&L account. If this question comes, it hardly takes 5 to 10 minutes to close the question. You can still get 8 to 10 marks for this question. We'll jump into the next question after this question in the same chapter. As we finish the first solution, now let us go to the next solution. Next question, we'll do the solution. The question here is this. This is the question. Illustration number 15 given in the What is this question is all about? If I read the question, a firm has two departments, raw material and manufacturing. The finished goods are produced by the manufacturing with the raw material supplied by the raw material. So here raw material department sending goods to manufacturing department, right? However, raw material goods sends the goods to manufacturing at profit because at selling price. Selling price includes profit. Now, using the following information, prepare departmental trading and P&L account for the year ended 31st March 23. So, what we should understand is there is a profit of raw material department in the closing stock of manufacturing department because manufacturing department gets its input from raw material department and raw material department is sending the goods at its selling price. It means the stock at the manufacturing department includes the profit of raw material department. However, the company as a whole, right, unless the goods are sold, profit should not be recognized. Hence, in the closing stock, whatever the intercompany profit must be eliminated. This question is all about intercompany profits. In whose goods the profit is included? In the stock of manufacturing department, the profit of raw material department is included. This is the crux for this answer. In the profit of manufacturing department, profit of in the stock of manufacturing department, profit of raw material department is included because raw material department sending the goods to manufacturing department at selling price. So only thing is we should do stock adjustments for the profit included. Other than that, it's a simple question. Let us do the solution for this question. What we should prepare here is find out the net profit, the firm as a whole. So I'll prepare a trading P&L account with two departments. This is raw material department. This is manufacturing department. Raw material department, manufacturing department, debit and credit. Debits and credits. Now what I did, particulars and particulars. Guys, you need to make sure the presentation should be clear. Now departmental trading and P&L account. To opening stock, we know opening stock details are given in the question. 1,20,000 and 20. So 120 and 20. And you have purchases. To purchases, how many purchases? 8 lakhs and 6,000. 8 lakhs and 6,000. If you see, manufacturing department not buying more, they're actually getting from purchase department. So 8 lakhs and 6,000. Then sales, 880 and 180. So buy sales, 880 and 180. Right. Manufacturing expenses, 24,000. To manufacturing expenses only in the manufacturing department. Then comes selling expense. They goes to the other part of the same this thing, that they goes to which part? P&L. So then this goes to selling expenses, goes to P&L, not to trading. Now comes raw material transfer to manufacturing. So this is a by transfer to manufacturing. This is a sale to which division? Raw material division, that is 1,20,000. And this is a purchase to transfer from raw material division, purchase for manufacturing, which is 120. Guys, note down, this is important. For raw material it is sale, for manufacturing it is purchase, but internal sale and purchase. And then by closing stock, as usual given in the question, copy paste 80/24. So we posted all the trading related data. Now what we should do here, 204 and 880 plus 120, 10 lakh 80,000. 204 and 10 lakh 80, same, bring this here, 1080 and 204. Now I need to see what is my gross profit. To gross profit carried down. Now 1080 minus 920, 1080 minus 920 is 1,60,000 is the gross profit of first division, and 204 minus 26,000 plus 24, 40, 40 plus 120, 160. So 44, 34 or 44? 26 plus 24 is 50. 50 plus 120 is 170 minus 204. 34,000 is the gross profit of manufacturing division. This is a simple thing. Now we should extend this by gross profit brought down 160 and 34. So we brought down the gross profit. Now, what else we should see here in the question? There are selling expenditure, no other big expenditure, selling expenditure, and what else? Salaries 5,000. So now they have given some other expenditure. Selling expenditure 16 and 18. I am posting it here to selling expense. To selling expense 16 and how much? 850. 16 and 800, not 850. 16 and 800. Then go to the question. It says salaries of 5,000 and insurance premium of 1,600 are to be allocated between the departments on the basis of sales ratio. Sales ratio is 880 and 180. Sales ratio is given here is actual sales are 880, 180, but intercompany sales are 10 lakhs and 180. Now we should see which is to be taken as a base. So which ratio is the basis is very, very important. Internal sales I should not consider for sharing. So here if I go and see the sales of raw material, it is external, internal, external 880, internal 120, and manufacturing external 180, no internal sales. So when I say sales ratio, I generally avoid the outside sales because that is not a sale, that is internal transfer. Hence, the total salaries of 5,000 for raw material, how do I split? 5,000 into 880 by 880 plus 180 is 1060. So 5,000 into 880 by 1060, it is 4150, and for manufacturing it is 5,000 into 880 by 1060, sorry, not 880, this is 180 by 1060 equals to 5,000 by 1060 into 180 is 850. So the salaries should be in the ratio is 2 salaries 4150 and 850, and to insurance also same ratio because this is sales ratio. Hence your this is salaries and insurance raw material. What is the total amount paid for insurance is 1,600. So come here, 1,600 into 880 by 1060, 1,600 into 880 by 1060, it is 1328, and manufacturing department 1,600 into 180 by 1060, it is 1,600 into 180 by 1060, it is 272. So insurance premium we should take it as 1328 and 272. With this we took all the expenditure. Now we should see what is the net profit. $160, 34,000. So 1,60,000 minus 1,600 minus 1,60,000 minus 1,600 minus 4150 minus 1328 is 152,922 is the net profit to general P&L, which I should take it as 152,922 in this case, and 34,000 minus 800 minus 850 minus 272, 32078 is the net profit of manufacturing. Now I also need to identify what is the overall profit. For that I should prepare general P&L account, and what I should do is transfer by P&L of raw material, that is net profit, and by P&L of manufacturing, that is net profit. This is 152922 and 32078. Now I should see what is my by. I can write on the top of it, by stock reserve opening balance and to stock reserve closing balance. These two I should complete because there is a stock reserve in the intercompany stock. This is very, very important. The working note. Working notes for stock reserve. Stock reserve is included only in the manufacturing closing stock and opening stock. Now we'll see opening stock of manufacturing department. What is the opening stock of manufacturing department? This is 20,000. 20,000. Out of which, how much is received from? It says in the question, manufacturing department stock consists 25% manufacturing expense and 75% from the raw material. So only 75% of the stock received from the raw material. So 75% here it is 15,000. In this, whose profit is included? In this, the profit of whose profit is included? Raw material department. Now we should see how they are charging at selling price. It says gross profit of 10%. Raw material department earned gross profit of 10% last year. 10% on sales. So since it is the selling price, our opening stock may how much is included? 1500 of gross profit included in opening stock. Coming back, I am writing here 1500. Now goes to closing stock of manufacturing department. What is the closing stock of manufacturing department? Is 24,000. Out of which 75% from raw material department. 24,000 into 75%, which is 18,000. Now we don't know what is the percentage of current year. Last year it was 10%. Current year how much profit included is not given. If you see here what it says. In the preceding year, raw material department earned gross profit of 10%. But current year we don't know. We should calculate current year. Current year gross profit is 1,60,000 on a total sale of 1060. So if I go back here, what is my current year gross profit rate? Current year GP rate of raw material department is 1,60,000 profit on 10,60,000 sales, overall sales, because both the sales they includes profit. So 1,60,000 divided by 10,60,000 is how much percentage they got. So it is not a 1060, it is 10. How it is? Sales include sales, external sales 880 and to manufacturing department 120. So total is 10. So 160 it earned on 10 lakhs. So the percentage is 16% is the profit earned by raw material department on its sales. So profit included is 16%. So 18,000 into 16%, 2880. It should be reduced because it is not sold. 2880. Now if you see the net impact, 1500 plus 152922 plus 32078 minus 2880 is 183,620 to net profit. as a whole. This is. Now, sometimes textbook can net it off. 1500 opening, 2880 closing. So additional 2880 minus 1500, only 1380 they may take on the debit side as a reduction. But better thing is write opening balance, opening stock on the credit side and write closing stock on the debit side, so that you don't do mistake which side you post. Sometimes in hurry you may post the difference on the credit side. Only if closing is more than opening, you should post debit side. If opening is more than closing, you should post credit side. But why do confuse all these things? Opening should be always on credit side. Record the opening as opening balance, which is stock reserve on opening stock of manufacturing, and record the closing stock reserve on the debit side, which is on the closing stock, which will leads to no confusion for you to get the answer solved. So this is the. Go to the next question. As we finished 14, I think 14, 15 done. We did two big questions. Now the third question. This is about a question which also internal transfers. If you see here, P sells goods to Q at normal selling price. Very, very important. So here P to Q. Hence Q stock includes stock from P at selling price. Hence we should identify what is the stock reserve in the closing stock of Q with the profit of P included in closing stock of Q. That is very, very important. Now read the question. It says all the information, opening, closing. There is no opening stock. Very good. No opening stock reserve. Why? Because when there is no opening stock in Q, there is no opening stock reserve. Maybe first year of operations of Q. Then you have all data is given, and the following expenses incurred for both departments were not apportioned. Now we should see the common expenditure. Let us do like the first question. P, Q, this is common expenditure. And here we'll write the basis. This is your working note. Number 1. So common expenditure what are the common expenditure? Salaries, which is 33,000. Base, we'll see. Base, what they said, salaries are based on, salaries are 2:1. So 22,000, 11,000. Then the next expenditure is advertisement. Advertisement, what they said, the base is advertisement must be in the turnover. See, turnover always external sales. Turnover is always external sales. External sales here is 30-20. It means 3:2. So the advertisement expenditure is given here is how much? 1,20,000. 3:2 by 5, 24 into 3, 72 and 48. 72 and 48. And the third expenditure here is general expense. General expense. How much it is? 5 lakhs. And general expense, they said, are to be in the ratio of 3:1. General expense 3:1. So by 4, 125 into 3, 375 and 125. And the fourth common expenditure given in the question is depreciation, which is 30% on the machinery of 96. So 96,000 machinery on that 30% depreciation is 28,800. 96,000 into 30%. 28,800. And this must be charged in the ratio of 1:3. 28,800 by 4, 7,200 into 3, 21,600. So what we did first is we did the allocation of common expenditure, because Other expense like wages, traveling, printing and stationery are directly given, allocated. But here we apportioned. Apportionment of common expense. Very, very important. Similarly, like your first question. So, you apportion the common expense, salary, advertisement, general expense and depreciation based on the ratios which are given in the question. So, after this, we should prepare the departmental trading and P&L account. Right. So, PQ. As we are going on a fast track quickly, I'm not focusing on the format. You should focus on the format in the examination. Now, to opening stock. Which company has opening stock? Only which department? Correction. Department P has opening stock 5 lakhs. Q no opening stock. Purchases. There? Yes. 28 lakhs and 3 lakhs. And sales. Sales were given 30-20. 30 lakhs and 20 lakhs. Then transfers. By transfer to Q. How much is transfer to Q here? Goods from P 8 lakhs. So transfer to Q, for P it is sale. Transfer from P, for Q it is purchase. For Q it is purchase, and for Q it is sale. This is internal transfer. Internal. So we recorded opening stock, purchases and sales as well as internal transfers. What else left over here is purchases done, goods done, wages. So wages 350 and 2. Wages 3,50,000 and 2 lakhs. And by closing stock, what is closing stock? Closing stock is 8 lakhs at cost to the department. Cost to Q is selling price of P because Q received from P at selling price. See, he said cost to the department, not cost to the company. He said cost to the department. Q's cost is selling price of P because P sold goods to Q at selling price. So cost to Q is whatever it received from P, right? So it is 8 lakhs and 2 lakh 9,000. 8 lakhs and 2 lakh 9,000. With this, we posted all the trading account items. So now do the totals. 22 lakhs 9,000. And here it is 22 lakhs 9,000, 20 lakhs plus yes, and 46 lakhs. Now what we should do is here we posted all the items of trading and trading account. Now we should identify gross profit. Gross profit carried down. Now what is gross profit carried down here? 22 lakhs 9,000 minus 3 plus 8 11 11 plus 2 13. So 9 lakh 9,000 in department Q and 46 lakhs minus 28 plus 5 33 30, 3650 3650 9 lakhs 50,000. So we identified the gross profits. Now we should brought down the gross profits to P&L account. By gross profit brought down 950 and 9 lakh 9,000. So we posted these two. Now we already did the allocation here. Salaries 2211, 22 and 11, and 2 advertisement. We did advertisement as well. Advertisement 172 and 48. Advertisement 72 and 48, and general expense 375 125. General expense 375 and 125, and depreciation 7,200 and 21,600. 7,200 and 21,000. After posting all these common expenditure which is in P&L, which we apportion properly, we should compute the overall net profit to general P&L. 9,50,000 minus 22,000 minus 72,000 minus 3,75,000 minus 7,200. This is 7,200. So which is 4 lakh. How much it is? 950 minus all these things should be 950 minus 4,73,800, and 909 minus 11,000 minus 48,000 minus 1,25,000 minus 21,600 is 7,03,400. With this your preliminary thing is done. Now what we should do here is we should prepare general P&L account and brought down by net profit of P and of Q. 473,800 and 703,400. To stock reserve, that is important working note. Closing stock of Q. What is the closing stock of Q given in the question is 2,09,000. Now, out of which, what is the proportion of transfer from P included? We should first identify. This is closing stock of Q, then gross profit of P. Because in closing stock of Q, gross profit of P is included. So, gross profit of P how we compute? Total gross profit is 9,50,000 on a total sale of 38 lakhs. External, internal. So 9,50,000 on a sale of 38 lakhs is 25% is the gross profit of P. Now, out of this closing stock, how much is from own purchases, how much is from P we should identify. There is no base given. Now what we should do? Q's purchases in the question are 8 lakhs and not 8 lakhs. 3 lakhs and transfer from P is 8. So purchases of Q is 3 and received from P is 8. So total 11 lakhs. Now to identify what is the portion of P in Q, what we should do? 2,09,000 closing stock into received from P is 8 out of total 11. So 8 by 11 into 2,09,000 is 1,52,000. So closing stock of Q includes 1,52,000 from P, on which P earned 25% of internal profit. So what is that? 152 into 25% is 38,000. So the closing stock reserve is 38,000 and the net profit, total net profit is 473,800 plus 7,03,400 minus 38,000, which is 11,39,200. With this, the answer is completed. However, a small note for you guys. In the question number 16, salaries were given as 33,000. However, textbook, CMA textbook did the answer taking salaries as 3,30,000. Hence, your final answer will differ with the textbook, but the stock reserve and all will not differ because the only mistake is that taking the salaries at a higher rate than what is given in the question. In the question, it is given at 33,000. I did my answer based on 33,000. Because of that, your net profit is more compared to the textbook solution. With this, question number 16 also completed.